PHD Chamber of Commerce and Industry welcomes the recently announced RBI's monetary policy, in which accommodative policy stance to keep repo rate unchanged at 4% is highly appreciable. This will support the anticipated growth trajectory and continue to mitigate the impact of COVID-19 on trade and industry. The accommodative policy stance at this juncture would not only pave the way for a double-digit GDP growth in the current year 21-22, but will also help in creating a strong, sustainable and vibrant economy going forward. Reserve Bank of India's Monetary Policy Committee has decided to keep the repo rate unchanged at 4% and maintain accommodative stance as long as necessary to revive and sustain growth on a durable basis and continue to mitigate the impact of COVID-19 on economy and keep inflation within the target. Reverse repo rate also remains unchanged at 3.35% according to Monetary Policy Statement of December 8, 2021. It is inspiring to note that RBI has retained the projection for GDP growth at 9.5% for financial year 21-22, despite the prevailing uncertainty caused by new variant of coronavirus. The RBI's view on peaking of headline CPI inflation in Q4 financial year 21-22 and softening thereafter is highly encouraging and will build consumer confidence. The RBI's decision to provide one more option to banks to prepay the outstanding amount of funds availed under the targeted long-term repo operations will effectively contribute in rebalancing the liquidity surplus in the economy. The announcement of non-requirement of approval of RBI by banks incorporated in India for infusing capital in their overseas branches and subsidiaries, retaining profits in these centers and repatriating, transferring profits therefrom if they meet the regulatory capital requirements is highly encouraging. Going ahead, we look forward to a double-digit growth of 10.25% in financial year 21-22, supported by the RBI's conducive policy environment and various structural reforms undertaken by the government during the last many quarters. We urge the banking sector to transmit all the cuts in the repo rate by RBI during last financial year to percolate the benefits to trade, industry and consumers for rejuvenating the demand and economic growth trajectory going forward.